The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in for a live look at Bitcoin, the CoinDesk Bitcoin price XVX index right now at 37,000, just under $200. Bitcoin is down almost 4% over the past 24 hours. And the CoinDesk Ether price ETX index at 2275. ETH is down almost 5% over the day. And joining us now to discuss the crypto markets is Richard Byworth, CEO of Eqonex Group. Welcome to the show, Richard. So it appears that we are still range bound. When do you see a breakout, or is the market still a little spooked with the Fed announcement and a potential rate hike coming up?
Yeah, look, I think these markets have been in a difficult place, since Elon started tweeting. We've gone through a period of obviously consolidation. The market's looking to accumulate. I think it was actually quite negative that when Michael Saylor announced his recent $500 million raise to buy more Bitcoin, that actually the price of Bitcoin did nothing. I think that was indicative of just how little buying power there is left in the market. So I do think that we're going to consolidate for a while. That said, obviously wallet address inflows that we've seen accumulation by long-term holders. And so that's obviously always very fun, positive for things. I've just seen, by the way, that you have my title as Eqonex CEO. It's important to flag we rebranded this week, actually as Eqonex. So you can maybe talk about that for a little second.
Before we do, Richard, back in March, you had a price target of about 175,000 in Bitcoin by the end of the year. That's obviously quadruple from where we are right now. And as you mentioned, that when Michael Saylor did that purchase, the market didn't move. So what led you at that time to make that prediction, and what has changed fundamentally that makes you think now it's going to be range bound? I mean, is it stuff like Michael Saylor's purchase not moving the markets, but Elon Musk's tweets doing that? I mean, what exactly what's changed in your modeling?
Just to be clear, we still think that we see 175,000 in this cycle. It's probably just been pushed back a little bit by Elon and his big mouth. Really what we think is that it spooked a lot of people. Elon's initial move had obviously put this front and center for a lot of boards, a lot of CFOs and finance departments needed to understand why exactly Tesla was putting Bitcoin on the balance sheet. The complete U-turn and reversal of them accepting Bitcoin and the crash that then came actually relieved that pressure from a lot of corporates. If you look at the adopters that we've seen this cycle, you've seen people like, Elon Musk, Michael Saylor, Paul Tudor-Jones, Stan Druckenmiller, Bill Miller. These are all people that control their organizations, both asset managers and corporations. Michael Saylor is the chairman and CEO and largest shareholder of MicroStrategy. So, he has the sort of control that can make moves like this. And obviously his aggressive approach is unlikely to abate anytime soon. But what changed is the fact that the pressure that these people have started to put on the rest of the broader, corporate community, the corporate treasurers, but as well as the asset management space, it's just prolonged that moment within which they have to consider it. And it's also given an excuse why they don't need to. Obviously inflaming ESG concerns around Bitcoin, the environmental element of using electricity to, support the network. I mean, it's not an argument we agree with. We actually believe that from an ESG perspective, Bitcoin is very positive. The amount of land that can be made usable and monetizable through implementing sustainable energy networks and then renting them out to Bitcoin miners is actually going to likely change clean energy networks for the future. So, but what it's done is it's given excuses to a lot of these asset managers who are looking at ESG in every kind of investment that they make, and this is a critical element always.
I'm curious what your outlook is on for Ether. How you think, if you have a price target for that, and if you think that Ether is affected by this sort of larger general narrative that you're talking about, sort of like Elon Musk and this crew, who are able to drive prices.
Yeah. Speaking of which, you guys just launched ETH perpetual futures, so you can maybe touch on that too.
Yeah, we launched ETH perpetuals a little while ago, but I think, if you think about ETH, it's an asset that obviously is going to at some point be, the protocol's moving to proof of stake. So the narrative for these ESG focused investors actually shifts in a funny kind of way towards ETH. And, I speak to a lot of hedge funds, and, I've had fairly comical conversations where they say, proof of stake has won against proof of work as far as we're concerned. And, when you see that sort of thin level of understanding of what proof of work can provide in terms of security to a network versus something like proof of stake, which is effectively just a controlling the network of a portion, then I think they become, it just shows you that we've still got very basic knowledge in this market. And I think it shows you that we're still very, very early.
Richard, one quick question. So you said you were rebranding. Is that any change in your business at all? Have you guys changed what you guys are doing?
No, not at all. I mean, when we listed on NASDAQ, we made a very significant focus on the crypto financial services business. We actually, prior to listing, we divested the blockchain solutions business that is actually interestingly focused on a number of ESG concerns. And we divested that business, and actually and that brand was always very aligned with that business, DigiNex. Actually, the crypto element of what we've been doing is under the brand of the exchange, Eqos. We launched our own token, Eqo. And so we said, okay, well, look, we need to just pay attention to our heritage in the tail end of the name, so Eqonex. But move forward as just a crypto financial services firm. And that's been really important. It's come at a very critical time in our growth as well. Mm-hmm. The exchange is now doing $250 million of volume. That's up 10,000% since we listed on NASDAQ in October last year. That's on a daily basis. And, we recently got approved by the FCA as the first standalone custodian under their MLD5 registration. Our fund is really outperforming with Bitcoin, flat since the end of January. The fund's up like 45%. So it's all things kicking. There's a lot of energy in the offices.
Yeah, Richard,
people are excited.
And you're still bullish as ever, which is always fun to see.